course, we got to talk about Nvidia, but we're dealing with kind of these two sort of narratives here right now. One, of course, that bullish, rosy forecast from that big tech giant that's certainly lifting some of these tech-heavy benchmarks. But then again, you square that with some of this hawkish sort of surprise that came out of those Fed minutes, and maybe that's why you're seeing this dynamic where risk assets aren't really quite being lifted that much here in the Asia Pacific. We're seeing stocks up down just slightly, I should say. U.S. futures are punching higher. We talk about the Nvidia effect. Of course, we'll get through those and break down those earnings for you in a little bit. But we are seeing the dollar a little bit in the back foot here this morning, but it was firmer after those minutes that came through. Basically, when you hear Fed officials saying, many of them were still questioning just, are we restrictive enough for the economy here right now? That sent some signals that maybe they're not quite done comes of higher for longer here right now. So the Treasury market certainly reacted a little bit, particularly in the short end of the curve. The 2 years at 486, 10-year not doing a whole lot here. We're watching, of course, those JGBs after that 10-year yield inched at that 1% yesterday here. That bond operation, if we hear anything today, could be quite interesting. The yen also hovering around those 3-week lows here right now, around those 156 levels. And we're watching sterling after that stronger than expected inflation report as well. There's also some sort of snap election happening in the UK. So we're seeing the pound at 127 levels, and copper, the metal space certainly is one we're watching out for. We're seeing a bit of a retreat across things like copper, aluminum. Copper, basically, after we reach those records in the LME contracts, the China futures as well, we're basically seeing a bit of a decline here this morning on the back of maybe signs of demand is slowing down in China, maybe some profit taking after we've seen copper prices up more than 20% this year. But it still remains one dominant story and perhaps the biggest stock in town. It is still Nvidia, surging after hours about 6%. You're seeing some of these ETFs that do track some of these AI, these tech plays, was also up in the after hours like QQQ. But certainly, revenue tripled. Their guidance was also quite bullish and beat the street. And then there's that stock split that certainly is lifting investors' moods here this morning. And we talk about the China setup here. Looks like we're still a bit of on a back foot here this morning when it comes to China. We're down about a third of 1% in terms of futures, 725.30 for the currency this morning, Dave.
Yeah, I think we're back to that dynamic, isn't it? This U.S. exceptionalism because of that, that Nvidia story. More on that in a moment. But certainly, yes, we'll be watching out for any potential pressure that comes through in these Chinese markets. 27 minutes to the opening bell. Speaking of pressure, it might not also be helped by the fact that the dollar is bid going into today. So you had a pop in dollar China overnight, and then you had the Fed minutes coming out after that as well. And you know what? The Fed minutes actually signaled something quite different from what we heard from Jay Powell at that meeting, pushing back against the prospect of rate hikes. And guess what? Some members, of course, did talk about, and we're open to that as well. JP Morgan Global China Summit is also starting today. That's in Shanghai. We're also in the window for FDI numbers. And inflation comes out today out of Hong Kong. More on the earnings story in a moment here out of Greater China. In terms of sectors to watch, the Nvidia effect in the Asia Pacific, we're seeing that in places like South Korea, for example. The chip stories there. TSMC is that should be coming online right now. In terms of just the other sectors to watch, Pinduoduo came out with earnings, e-commerce in focus there. Some of the policy recipients, if you will, from yesterday's session, so baby-related stocks and also beauty-related stocks got a boost for separate reports on policy preference there. Steel prices, I think, are back to the high since Feb, and of course luxury on the back of this dark warning out of the good folks at Chanel, talking about how tough times are ahead. Yeah. Yep,
we saw that with Hermes, and everything kind of started declining on the back of that commentary. So we'll watch the likes of Prada here in the Hong Kong session. And certainly let's talk a little more about still our top story, Nvidia. So it was another blowout sales report, 26 billion, which I believe was tripled. And even being their own really consensus here. And the guidance was still quite strong here. It still goes to show they are the poster child when it comes to this AI craze.
Absolutely. 28 billion is the guidance. And we also have a little bit more information right now on Blackwell. There we go. So shares, as Yvonne is pointing out, we're now trading at above 1,000 here in after-hours trades. And, of course, we did hear from the company.
Yeah, let's hear more from the CEO, Jensen Huang, on that earnings call discussing the outlook for AI.
The next industrial revolution has begun. Companies and countries are partnering with Nvidia to shift the trillion-dollar installed base of traditional data centers to accelerated computing and build a new type of data center, AI factories, to produce a new commodity, artificial intelligence.
Let's bring in Beth Kindig, lead tech analyst at IO Fund, manages, of course, a tech-focused stock portfolio. Beth, of course, we've always had pleasure to have you on the show on Nvidia Day. I mean, you saw this from a mile away years back, and now here we are, and yet it seems that most on the street are still underestimating what this company is able to deliver. What do you think surprised many the most from this specific earnings report?
Hi, David and Yvonne. That's a great question. Headline numbers is not actually what moved this stock after hours. It was up, 1, 2, 3%. And in fact, at times it was selling off. It was really during the call when management highlighted key points about the Blackwell architecture. So the Hopper architecture is what got us this far. That's 90 billion annualized run rate on the data center. Moving forward, what's going to keep this stock extending? That's what analysts wanted to know. We put a note out prior to earnings that it would be the Blackwell architecture. Now, this Blackwell architecture, just to break it down for you, is the B100, the B200, and it greatly improves on memory. It also has something called NVLink, and there's a GB200, which combines 72 GPUs for one exascale computer. I know that's a lot of semiconductor jargon. It's really hard to avoid that with NVIDIA, but the takeaway is that the Blackwell architecture that is coming will exceed the Hopper architecture that we've already seen drive these sales, and it will hit as soon as Q2, full ramp by Q4. That was stated on the call. That's when you saw the stock price reverse after hours.
Can you give us some just your initial calculations of just how it could contribute to earnings? I mean, data centers already make up about 85% of total revenues. Is that likely to continue? Could that ramp up much further?
Yes. So we're really very early to AI acceleration. And so Hopper drove that 90 billion that we see. We are foreseeing a $200 billion data center segment by the end of calendar year 2025. And the management team today insinuated and gave hints that that could happen, because what they said is that Blackwell will deploy with over 100 OEMs, which is 2 times broader and faster than Hopper, which deployed with 50 OEMs. So if you can imagine, you're hearing all these comments from management on the call, and it's clearly indicating that the Blackwell architecture, the second generation basically of these very high in demand generative AI GPUs, is going to be a step up from what has been deployed. So the translation here is that Hopper gave us 90 billion annual run rate. What will the Blackwell give us? And that's when you started to see this extremely bullish price action after hours. This is a stock that's run hard and fast, and now it's up, 5-6% after hours. People are getting excited to think about how the year will end now that this second release is coming out. And if I can, the other key point here is that Nvidia is shortening its product cycle from 2 years to 1 year. They've never done this before. It's bold, and it's very important to do right here, right now, because it allows them to continue to grow on top of this already phenomenal growth.
So again, Beth, then, so how far behind on, let's say, on AI accelerators there, how far behind do you think competition is? Give it to us in, I don't know, quarters, if that's a useful yardstick.
In terms of how far behind competition is, the difference between something like Nvidia and something like AMD is that Nvidia is definitely the go-to for training. Now, once inference market is built out, right now 40% of Nvidia's revenue comes from inference. That is where there's an opportunity for AMD to compete. AMD is very good at design, and what they did is they doubled the memory. And so now it's a competition against memory, because you can run the large language models in memory close to the user, close to where the edge basically is what you call it. So now there's a little bit of an opportunity here for AMD to compete with NVIDIA, specifically on inference at the edge, due to the large memory components that AMD is building in their designs. That's the key to why AMD has a little bit of room to take some of the market. If I were to guess, I would say AMD, by the time this is said and done, let's just say 2030, will have no more than 10 to 25% of the GPU market.
In terms of NVIDIA's revenue growth, though, I mean, that seems to be slowing down and has been decelerating for recent quarters now. Is that going to be a problem?
That's a great question. This is where many investors jump off a growth story, is when you hit peak growth, you see deceleration coming. Where that will be premature for a company like Nvidia is that what we're seeing is organic growth. So it's flowing through to their margins and to their bottom line. And then the other piece is that Nvidia is really an intra-quarter revisions story. So in fact, in November, there was a muted reaction to the earnings report. And then intra-quarter, analysts kept upping their estimates to where the stock now is up 90% since November, even though it sold off of that earnings report. So the reason why all of that is important is because even though it's decelerating in revenue growth, it's fairly valued today. And if we continue to see those upward revisions with Blackwell, very confident we will, you'll start to see the price move up with those revisions. And that's really key because as Blackwell rolls out, the demand is so great that analysts will be revising that, and that's when the price is going to move.
Right. And Beth, as I think you pointed out, I think it was 2 days ago on Twitter X, the multiple in the stock is at the same level when the share price was at about 100. So to your point, fairly valued. I'm looking at concentration risk of customers, if I could just pivot back there. I mean, 4 big customers, the bulk of the revenue, the bulk of the business. Is that a problem?
Today, management discussed that about 40 to 50% is coming from cloud service providers. They also break out consumer internet companies. They also break out companies like Tesla. And I think they're doing that because of the concern that you just voiced. And you are absolutely correct about the valuation, which is that when you have that 300% revenue growth, 600% earnings growth, the valuation keeps getting cheaper and cheaper, even as the price goes up. So what we've seen is very attractive valuation. And again, that goes back to if we continue to see upward revisions based on Blackwell, very confident we will, that's where those revisions are going to be bought.
Right. Okay, so we're at 1,000 now. What's the price target, Beth?
Give me a year. Next year or 2030?
Give us both.
We have modeled 65% upside based on Blackwell by the end of 2025, calendar year 2025. By 2030, this company should be minimum 10 trillion in revenue, maybe higher. So we have a long runway with Nvidia.
Right.
This is because we're in the AI economy now. So many people think this is going to end soon. It's not. This is the very, very beginning. Can't stress that enough. Multi-generational investment opportunity. Many Chinese companies are benefiting. Baidu, Tencent, great earnings reports coming from AI. Nvidia's the AI infrastructure, but we're seeing a lot of beneficiaries, and I would encourage people to pay very close attention to that.
Yeah, Beth, just to clarify, you mentioned 10 trillion. You mentioned revenue. Do you mean market cap, or do you actually mean revenue?
I'm sorry, I meant market cap.
Okay.
Gotcha. I was going to ask you about the AI economy because you flagged that Qualcomm. This is an interesting company. You said could become the star when it comes to AI PCs. Can you tell us sort of what you're projecting?
For Qualcomm, I would hesitate to call it the star of AI PCs because what's going on with Qualcomm is they have an ARM license basically through the end of this year. And so they have a little bit of an open window right now to push forward this ARM-based PC, although they're primarily a mobile company. And so what you'll start to see when that exclusive license runs out is AMD and Nvidia are prepared to release ARM-based PCs in the first quarter of 2025. I think AI-savvy folks looking for an ARM-based PC are probably going to wait for AMD and Nvidia. They are clearly the de facto companies when it comes to computing power. So I think that Qualcomm has its hands full with competing with the 2 top design companies in the world.
All right, Beth, great to have you back. Beth Kindig there, lead tech analyst at IO Fund, joining us on the back of those Nvidia earnings as well. We're watching very closely what goes on with that fix here this morning. You take a look at it. It is at 710.98. So once again, you're seeing a pretty steady fix here, but certainly we've been tracking the weakness that we're seeing across a lot of EM currencies on the back of that stronger dollar story after those hawkish fix of hawkish minutes, I should say. But yes, that is the weakest. They cut that fix the weakest since January amid this dollar rebound.
Yeah, so I think that's they've allowed it to move a little bit further to the upside, and we're now seeing the market reacting to that sort of longer leash on the Chinese currency, 725.43. So watch what we do as far as the onshore rate does at about the opening bell. And again, it's one is pointing out, right? The dollar keeps giving hawkish minutes out of the Fed. More on that in a moment. Counting down to the open of trade, 14 minutes away. You're watching the China Show. Good morning.
We're not hinged off any one statistic, and no, patience hasn't run out. What we're showing is that we've got a lot of patience. You know, our projection is to keep the official cash rate at 5.5% until early next year. That we believe that will have inflation back down within the band, and at that point we can start thinking about normalising interest rates. That's all in our projection.
And that was Adrian Orr, the RBNZ governor, speaking to us earlier about, of course, their policy outlook following that very hawkish tilt yesterday. And certainly the currency market story has been really a tale of two stories, right? You have very strong DM with a hotter than expected inflation report, and cables at 127, highest in a couple of weeks there. And of course, there's an EM story, which is really at the mercy of this dollar strength following what the Fed said in the minutes. And of course, the PBOC had to step in today to adjust to that reality. Yeah,
and you're hearing it from these central banks outside. They're basically saying that they're hesitant to really do anything until they get more clarity on the Fed's path as well. Let's bring in our news desk editor, Jill Desis, here to kind of break down these Fed minutes for us. And really, they came as a surprise how hawkish they were, but how hawkish were they?
Yes, actually pretty hawkish. And I think that the confusion here is coming from the fact that Jay Powell, just a couple of weeks ago, is giving this press conference after the last meeting, saying that the next move was likely to be a cut rather than a hike, that a hike was unlikely. Yet now you've got these Fed minutes that are coming out, and you've got apparently several officials saying that policy may not be restrictive enough. And so I think that's leading to a fair amount of uncertainty within the market. I mean, you also did have that accompanying quite a bit of Fed speak earlier this week. Governor Waller saying, look, they need several more months of inflation. I think of inflation data. I think he said like 3 to 5 more months of inflation data before they can really adjust anything. I mean, it just opens the door to, I think, a lot of different possibilities. And then again, bringing in those minutes where maybe you're even raising the possibility again of a hike, maybe. It really does create a lot of confusion here.
And uncertainty, to your point, right? We're moving up almost a year, I think, since the last hike, which was in July. And you got to wonder, do they even know what they're talking about? In other words, can they see beyond 2 months and 3 months as far as the data goes? Yeah,
David, I think that is, I think a big point of concern here. Look, I mean, we've had these rates at 23-year highs for, once we get to July, coming up on just about a year that you've really had rates at that point. I think you had Fed official Bostic discussing maybe they need to even reconsider what the neutral rate ultimately is. So, I mean, just adding, I think, additional sort of, uncertainty to what the long-term trajectory for the Fed is ultimately going to look like this year.
Right. Jill, thank you so much. Jill Desis there, our news desk editor. And we're looking at the futures here ahead of the opening bell. Yeah, it looks like we're still a bit of the back foot here, and stocks overall in the region are slightly to the downside here, barring some of these Nvidia sort of beneficiaries, the tech plays here, of course. The Hang Seng pre-market is looking like this here right now. We're slightly down about 0.9%, but futures are down about 0.4%. And we talk about that weaker fix, right? So the weakest fix we've seen from the PBOC since January, leaning more towards that 711 handle than 710. So 725.58 for the currency this morning. Plenty more ahead. This is Bloomberg. Okay, going into the open today, 5 minutes away, third day of losses. It seems this might be on the cards today, 0.9% to the downside here. It could be down to the fact that the market has done very well. Could also be down to the fact that there is this shining city on top of the hill in the form of Nvidia in the U.S. market that might see a resurgence again. And certainly looking at futures in the U.S. and what we're doing here, this divergence again.
Yeah, reinvigorates, all the skeptics that this AI rally was over, and maybe this even leads to a bit more of a FOMO trade. Is it going to send the S&P back to records again?
Yeah.
Certainly is one thing to watch. We're still focusing on some of the earnings that we got out of China. PDD, that one came out overnight, and it was quite a good report. We're watching that very closely. The ADRs, the price target, raised to 193 at Jefferies. NetEase as well reports pretty soon. Those ADRs have been cut to equal weight at Morgan Stanley. And Goldman had an interesting note when it comes to the Hong Kong property developers. They're still thinking things could look pretty weak when it comes to margins in particular, despite Hong Kong scrapping all of those curbs and the like here, but at least upgrading SHK, Sun Hung Kai properties, to a buy at this moment.
Yeah, and going into the open today, and certainly, if the Fed is not really going to cut rates this year, say goodbye to your HIBOR moving down even further from current levels. So Sun Hung Kai is trading at about $80 right now. 92 gives it some upside right now. Earnings, as we were talking about here, so NetEase, Lenovo, and Xiaomi are out today. Kuaishou came out yesterday, 4.1%. I think you had a beat on revenue there. Plus, you also had some numbers on a buyback that they're planning here, of course, moving forward. Right, the open is next. Weakness in the early goings. This is Bloomberg.
Welcome back. You're watching the China Show. We're counting down the open of markets, and obviously we're dealing with this Nvidia effect, but not quite really spreading to most risk assets here this morning. It's with the exception of these tech stocks, certainly, and the chip stocks that are benefiting from that AI boom. But certainly, you take a look at how Hong Kong's doing, how the rest of EMFX is doing. It's really about a dollar story that's coming back in a big way on the back of those FOMC minutes that came out a little bit more hawkish as expected, Dave, and we are already seeing the PBOC react this morning.
I mean, the story's changed. We were thinking that Nvidia, which is still a big story, would dominate proceedings up until about 30 minutes back, when certainly you had the PBOC coming out and the Fed basically saying, yes, no, we are more important than Nvidia at this point in time. I'm going to show you what's happening in the FX markets. The bot just opened up, the Thai bot just opened up a couple of minutes back. Some weakness there. I would imagine the peso, which comes online in a couple of minutes, would also show you some weakness. More on that, more on the macro in a moment. Here, weakness across these equity markets in China, consolidating really for the better part of the last, not just the last 3-4 days. You have to go maybe a Friday of last week. A glance at some of the big movers right now. Your 10-year yield, no bond auction today. Of notes, we're seeing a pullback in iron ore prices, so just keep an eye on that. Although that being said, speaking of iron ore and mining, so two things there. Metals prices, so rebar futures are actually trading now at the high since about Feb, so watch that closely. And within that space, this might be a sort of distant tangent here. This deal between, potential deal or talks between BHP and Anglo, of course. BHP is down about 3% last we checked, so that's pulling the benchmark actually down. Shift pages, please, if we can. We're looking at the currency market still on the back of what, these 3-4 week lows maybe now on the Chinese currency. There's certainly a currency angle to the equity conversation here that's taking place. Broad weakness across these Hong Kong markets. We're back below 19,000 on the specific benchmark, and as you can see, the sort of Nvidia effect is having the opposite effect to tech in general. Alibaba is down 3.5%. Tencent is down about 0.7%. You certainly have to almost draw a direct correlation between the companies directly involved with Nvidia, supply chain constituents, if you will, and not so much a broad basket of tech. Right. Earnings. Speaking of tech, okay, so you have one out with earnings, now down in the opening bell, was up in the pre-markets. These three companies are reporting today. More on these three in a moment, and a couple of, I think, idiosyncratic stories from yesterday. We're watching for potential day twos or profit taking on the back of quite a pop that we had yesterday. So you have beauty and baby stocks. Baby stocks, I think I have to report here to be more specific. There was the Shanghai Medical Coverage Report that Shanghai would include 12 assisted reproductive medical services into the coverage of insurance payments from the start of next month. That boosted some of these names yesterday. We're seeing that pull back a little bit right now, in some cases more, and some beauty-related stocks at the bottom, of course. Cosmetic surgery rule and a tweak there, sending these higher yesterday, changed the page, sending them lower today. And as promised, EMFX, strong dollar story, really showing up. Yvonne.
Yeah, and you're certainly seeing that when it comes to what you're seeing with the renminbi, as you mentioned, Thai baht, peso, all are weakening here at the back foot there. And it seems like even the PBOC is allowing this currency to weaken, to really surrender to this dollar strength as well. And it brings a lot of questions of why we're seeing this movement to more Hong Kong. We talked about the dollar peg and how that almost acts like a shield for many investors that are investing into China to perhaps choose H over A. And that's how you're starting to see Chinese stocks trading on the mainland and lagging behind their peers here in the city by the most since 2011. You got to blame it on that weaker renminbi. Let's bring in Charlotte Yang, our Asia equities reporter. She's with us here right now to tell us a little bit more about, is this gap going to widen even further?
Yeah, so investors in Korean land by ODA and also UBP, they're among those that expect the fear over further devaluations in the yuan is going to drive capital from domestic investors into Hong Kong equities market. So these assets are looking more attractive now because they're dominated in Hong Kong dollars, which is packed to the greenback, and that could kind of provide a show to investors, in this higher for longer interest rate environment. And also Hong Kong equities are also cheaper in valuations, and also a lot of the companies here, listed here, they're really just tied to China's cyclical recovery. If that actually, helps earnings. So we're hearing a lot of investors expect that kind of because of that, and also the expectation that PBOC will need to keep the monetary policy loose to help boost the economy. So that kind of fear over currency devaluations could make Hong Kong equities continue its outperformance versus onshore ones.
Yeah, the dollar play. Although we've also seen, and this is something interesting, we've also seen flows into bets of a reversal in the rally in Hong Kong, right? Some of these inverse ETFs traded here in the city have seen the bulk of the inflows come in recently compared to the months before that. Just tell us more about what you're seeing there.
Yeah, so analysis from Bloomberg Intelligence found that the inflows into inverse ETFs tracking Hong Kong equities, we've seen the biggest quality inflow, which for this quarter is starting from April as of Monday. The data shows that it's the biggest quarterly inflow since end of 2022. And and we spoke to CSOP Asset Management because the top products that are attracting these flows are, inverse 2 times tracking HSI as well as HS Tech. So the deputy CEO tells us that the 20% of the flow is institutional investors, which indicate there might be some hedging flow. The majority of them is retail traders. So this shows that some retail investors might think this rally is running too fast in a short time, and we might see a near-term reversal. But that doesn't necessarily show it's like a bearish view over the market, because it's quite typical for them to do like this type of a reversal trend trade. And also, sometimes you observe the same clients exiting those leverage ETFs and into the inverse ETF the same day. So, but at least, the rally, might be running a bit hard.
Okay, still something to watch. What's going on? There's been this crackdown on viral stock calls, and it's focusing on 2 firms in particular. What's going on there?
So these 2 companies, little known, I think, to most investors here. One is called Zhongtong Bus, another one is called Nanjing Chemical Fiber. They've been attracting a lot of attentions online, Chinese social media, because their stock have showed wild swings after, some users posted on an investment platform predicting those stock moves. So whether it is pure coincidence or like stock manipulation that has caused a lot of chats on Chinese social media, and Chinese stock regulators has moved really quick to crack down on this. And so the latest statements from the stock exchanges show that they have suspended the relevant accounts in posting these fabricated information for 15 days. And I think it's right now it hasn't really put to dust whether this account is actually behind the true mastermind of these wild swings, because the person said to be involved in this is hold only like 700 shares in the Zhongtong Bus. So, but with that said, I think this shows the determinations of the stockholder regulators to take a hard stance into any behavior involved in stock manipulation. But it also shows that it's actually not an easy task to do.
Okay.
No, well, nothing is in life. Sorry. Okay. Charlotte, thank you so much. We have some news here out of China.
Yep, so we're hearing about this special government bond that's been halted. So this is the 2.57% that was issued on the Shenzhen bourse. So we're hearing that this is another trading halt, and we've seen a few of these already this week.
Yeah.
Despite what we've been hearing from state papers, the commentary there telling people to be a little more rational amidst this sort of sale.
Yeah, this enthusiasm that's enveloped these markets. And in fact, we'll talk more about what's going on underneath in terms of, our China brief comes up later in the show, our segment. And as an example of what Yvonne was talking about, the Securities Times saying, keep your emotions at home, use more rationality when it comes to these things. But yeah, these halting, these are effectively as a function, having trouble speaking today, a function of massive price swings in these stocks. Anyway, they should be up and running again in about 20 or so minutes from now after, of course, that lockup expires.
Yep, we're getting some statements from that Bank of Korea decision as well. They kept rates unchanged, but still talking about they're keeping restrictive stance for a sufficient period of time. So no indications of when this easing cycle is going to start for the Bank of Korea. Talked about core inflation likely to be 2.2% in 2024 as projected. So that is above their targets, of course, but still think the economic trend has improved more than expected, but still upsized risk in inflation.
Yeah, more on this BOK story. Of course, the briefing is the next hour, and also we'll be joined by, of course, one of our an economist, of course, to take us through their takeaways here. Right, back to the Chinese market story and the earnings story to be more specific here. So you have a lot of big Chinese tech names. You have Xiaomi, NetEase, and Lenovo set to report earnings as well. We did get the likes of Kuaishou and PDD coming out yesterday. And in fact, PDD was really quite an impressive story there. For more on this, let's bring in our team, Bloomberg Intelligence Senior Tech Analyst Stephen Tsang, and our Senior APAC Consumer Analyst Catherine Lim to talk us through this. Catherine, let me start with you. The biggest surprise for the market, given, the juxtaposition between what we're seeing with Alibaba and PDD. Catherine.
Right. David, a 3 times increase in revenues for PDD. So, that came in way better than what I was expecting, and I was only looking at doubling. But the biggest surprise really was that the company was able to actually lift their margins by a whopping 10 percentage points, essentially creating that earnings buffer for, uncertainties to come in the global, markets, which we clearly, know that they are venturing into overseas markets. There are regulations, tariffs potentially coming through. But, it was a very, very strong set of results coming from PDD and enough earnings cushion to withstand the rest of the year.
And Catherine, we have seen tariffs, though, coming through from the U.S. on Chinese goods and vice versa. Are you concerned at all about PDD's risk exposure?
So again, I guess, on the tariff fronts, bear in mind that PDD and Temu is involved in the consumer goods, and these are basic necessities that I would say that the Biden administrations will be very careful in slapping tariffs because of the already lingering high inflation rate that we are seeing in the U.S. So I'm a little less concerned about that, relative to autos, solar panels, etc. out there, but never say never. The good is that, from the results last night, PDD is also taking steps to look at regulations and compliance. So fingers crossed on that, they are able to be ahead of, changing regulations to come.
Right. Stephen, I'll bring you in just to bring the hardware part of the broader tech conversation in China here. So we have earnings coming through today. I think you have Xiaomi and Lenovo, I think, under sort of your purview here. Let's start with handsets, because let's bring in Xiaomi first. Android handsets have been doing better than iPhones in recent quarters. Can that continue as far as these makers are concerned, Stephen?
I think in the near term, that's certainly possible, given that we do have a new model from Xiaomi, Xiaomi 14 Ultra, and also Huawei launches a new phone, the Para 70. Those new models will continue to ramp up, so that certainly help the near-term sentiment. And then in the end of the June, we'll have the June 18th sales event. So all this should be general positive for local brands in China. Having said that, I think in early June, Apple in its WWDC event, it may actually showcase the AI feature of its iPhone going forward. So that may, change the dynamic in the second half. So there's something we keep monitoring.
Yeah, Stephen, I mean, every time people talk about Xiaomi, they're not really thinking about hardware as much as this new EV, right? And every time we hear something, the stock kind of reacts quite positively. It seems like it's been a success so far. What do you think investors may want to know about that business?
Apparently, the company talking about 100,000 unit shipment this year. So I think investors will care more about how do they deliver, and what's the capacity expansion plan to cope with the demand, and even the mid to long-term outlook for their EV game plan. So obviously now it's just one model. So we're looking for more model going forward. And so those, I think, will be the investors' focus.
Right. Just very quickly, one more name to get in here. Lenovo out with earnings. Company's been doing well. What's the main reason behind that outperformance? And do you actually think the company can continue that momentum?
I think in general, the increasing sort of replacement cycle in PC market has been a main driver. If you remember, last PC upgrade or purchase were really happening around the time of COVID, like back in 2020 and 2021, which means that a lot of PC has been around 3 years old. So that means the replacement cycle may be emerging. And then now we have the people talking about the AI PC. That can be another sort of selling point in the second half, even though general user may not necessarily know the sort of value proposition of that new product. But over time, I think with more and more application coming online, I think people will get to know more about that new product, and that may help the PC demand going forward.
All right. Thank you so much. Our BI team there, Senior Tech Analyst Yvonne Zhang, also our Senior APAC Consumer Analyst Catherine Lim. Still ahead, we're going to get the outlook for China's summer vacation season with outbound travel with Trip.com Group CEO Jane Sun joining us in the 11 o'clock hour in Hong Kong. Plenty more ahead. This is Bloomberg.
Okay, welcome back to the China Show. Some weakness coming through in these markets. So Hong Kong, as things stand, we're looking at possibly a third straight day of weakness in these markets. As you can see, the benchmark, Hong Kong benchmark, at least Hong Kong Hang Seng, is trading below 19,000. Chip stocks are going the opposite way that should be coming up. Asian chip stocks are now trading at the highest level in about 3 years. That's the separate Nvidia effect there.
Yeah, let's get a little bit more on what's been going on when it comes to the property market. There's been a string of Chinese developer defaults that has highlighted that the limits of a state-backed credit support program, which was meant to boost confidence in the battered property sector. For more, let's bring in our China credit reporter, Wei Zhou, for more on this. I mean, this guaranteed bond program was introduced back in 2022. What can we say about it? I mean, what do you think it's really achieved so far?
Yeah, so when it was first introduced, it was seen as a turning point because China State Insurance Co. is a state-backed entity, and having it fully guaranteed means that the developers have state support. So far, at least 13 developers have issued a total of 36 bonds through the program. However, starting from last year, we are seeing some of the developers that participated in the program have defaulted on other bonds, although not on the state-guaranteed bonds. So because of the default, I think investors are saying, the program is not as effective as what they expected.
Yeah, and would that then create liquidity issues for the guaranteed bond guarantees, for example?
Although we have seen at least 6 developers have defaulted on
in the program, but they haven't actually defaulted on any of the guaranteed bonds.
Right.
And we don't really expect to see repayment issue for the guaranteed bonds, mainly because all the guaranteed bonds have a significant collateral underlying the bonds. So even if they do encounter repayment issue, China Insurance Bond Co can easily, sell the collateral and help with the repayment. That being said, we don't really expect an upset of the program from now on.
The big sort of, I guess, you could call it a game changer in the last few weeks is this announcement of, buying up unsold homes and what the government is doing about the supply issues here. There's an interesting scoop about, these banks rushing to offer these loans right now to the SOEs. What does this mean for the housing sector, you think?
Yeah, I think some of the China's largest banks, they are urging their branch manager to extend loans to local SOEs so that they can buy unfinished homes. You can see from recent measures, the priority for the government is really to ensure home delivery and reduce the housing inventory instead of bailing out the developers. So I don't think there will be a significant improvement for credit investor in the market until we can see a pickup in monthly sales.
All right, Wei Zhou, thank you. Our China credit reporter there. On the latest, we got plenty more ahead. This is Bloomberg. Here's some of the big stories we're following today. China has begun its biggest joint military drills in a year in waters around Taiwan, according to Xinhua. The activities are being done in the Taiwan Strait, as well as the north, south, and east of the island. The Chinese military says the drills are intended as a punishment for what it calls the separatist acts of Taiwan Independence Forces. China is also imposing sanctions on 12 military companies and 10 defense executives in retaliation against arms sales to Taiwan. Among the companies are Lockheed Martin, General Dynamics, and the Applied Technologies Group. Executives covered by the measure have also been banned from entering China, Hong Kong, and Macau. Any assets in China will be frozen. The measures are largely symbolic, as the firms generally don't do business in China. Taiwanese opposition lawmakers are set to make a final push on Friday to pass a bill aimed at reining in new President Lai Ching-te's administration. The move is likely to inflame tensions on the island after protesters gathered outside the legislature this week to voice their anger. They say the amendments could be used to undermine the new government.
Okay, let's have a look at this chip story right now. So some listed in Taiwan, some listed, of course, in mainland China. This seems to be more a story really on Nvidia for obvious reasons. So TSMC is really seeing some upside right now. Outside of this, though, I should also mention, and the benchmark below is at a 3-year high. That's the Asia Pacific Semiconductor Index. That's really down to TSMC, South Korean makers, and also what we're seeing in Japan. Not so much what we're seeing here on your specific suites. Anyway, that's the story there. China dashboard right now for your benchmark. So we're looking at some weakness coming through in this equity market, this side of the world. There we go, 1.5% downside. And in case you missed it, the big news this hour turned out to be the PBOC.
Yeah, weakening that fix to something that we've seen, not seen since January. So really kind of surrendering to this dollar strength that's really weighing down on EMFX across the region here this morning on the back of those slightly hawkish FOMC minutes, talking about, many were questioning just how restrictive policy is right now. So certainly that sent a lot of, when it comes to treasury yields, a little bit higher on the short end, the dollar a bit firmer, and that's why you're seeing this backdrop here when it comes to risk assets and not really quite seeing that Nvidia effect as we first thought. So as you said, maybe the Fed wins out from Nvidia for once this time around.
Finally, yeah, it's something out of the minutes. Once you start talking about rate hikes that's coming from the Fed, from Fed officials directly, that's probably going to trump that story right now.
Yeah.
Which takes us into the emerging theme that's, I would say, emerged these last 24 hours or so. Talks of rate hikes or rate cuts getting pushed back. So rate hikes are back on the table. when we talked about the RBNZ, for example. Yesterday, they said they did consider actually a rate hike at the meeting yesterday. Minutes are coming through out of the Fed. You talked about them coming through. And Asian FX just looks like a very sorry state today because of some of those conversations taken.
Yeah, I think RBNZ said that they plan to keep their rates at restrictive levels for the rest of the year. So we might not even see those rate cuts anytime soon. We're going to get more when it comes to Asian central banks coming up with Nomura as well. We got plenty more coming up. Welcome back to the China Show. Here's a look at, of course, the Hang Seng just a half hour into the session, and you're seeing continued declines across the board here this morning when it comes to 8 shares as well. We're down close to about 2%. So it really is that dollar effect that keeps coming back. Those hawkish comments from those FOMC minutes that really was quite different than what we heard from Jay Powell in recent weeks as well. That really surprised the market in a little bit. That's why you're not seeing even H's Tech being buoyed by this Nvidia story, Dave, in some ways.
Yeah, because I guess in some ways we were talking about this earlier, right? Because in the absence of anything to trade on, at least go long on in the U.S., this was the tactical trade.
Yeah.
Now that you have this bright, shiny thing again on top of that hill, maybe you might need to pivot back to exposure to U.S. equity markets, and certainly Nvidia giving us that reason to do so at this point in time. We're trading, in case you missed it, above 1,000 right now in the after-hours trade. Now, a lot of themes to tell you about that Yvonne touched on here. So the dollar story is interesting because it's really showing up in the form of weakness in EMFX, so the likes of the Philippine peso, the South Korean won, which we'll show you in a moment. Of course, a press briefing begins this hour out of the Bank of Korea. It showed up in the Thai baht, which, of course, got up and running in the last hour or so. It's not showing up, interestingly enough, and unexpectedly so, in DM currencies, right? So we had the likes of, this time yesterday, the RBNZ came out unchanged in rates and actually said that a rate hike was a consideration in that specific meeting. So they're leaving the door open. Yvonne talked about the minutes on the Fed. You have cable, of course, an inflation story there. You have the euro trading at 108.27. You have 127 on cable, several week highs. So the dollar story is, I guess, a tale of two separate pools of comparisons right now. S&P futures, to our earlier point, trading at 30.5350 right now. Now, flip the boards, please, if we can. We're looking at some of these chips on the Nvidia story, and these are the names that are actually getting lifted from that Nvidia story right now. TSMC, a couple in Japan. You have one in South Korea, up 2.1%, SK Hynix. The regional benchmark that we have on Bloomberg that tracks these semiconductor stocks, and I think it's a pool of about 8 or 9 stocks, is actually now at a 3-year high on the back of this. Flip the boards, as promised, FX markets, dollar Korea, dollar peso, dollar baht, dollar yen, and dollar China. There we go. No dollar price. Okay, but in any case, of course, as you can see, some weakness coming through, and Yvonne, the PBOC had to come out and adjust their fixing because of this dollar strength that's we've now started to reconsider again.
Yeah. It shows that maybe they're letting these depreciation pressures flow a little bit more. But then again, you know, it's still something that they're still managing very closely here as well. So certainly you're seeing that across EMFX. Let's bring in Andrew Ticehurst, senior economist and rate strategist in Nomura. And Andrew, I got to start with these Fed minutes, which really showed a very different sort of view from maybe what Jay Powell just said a few weeks ago after that Fed meeting about, you know, they're ruling out the possibility of rate hikes. But now you're hearing various FOMC members even willing to tighten policy more. So what does that change at all the equation for how restrictive policy is going to be for the remainder of the year?
Yeah, very interesting, those minutes, weren't they? Now, to be honest, I actually thought they were a little bit dated and might not be very interesting, but in the event, they have captured attention with some of those hawkish comments there, yeah, so a little bit surprising. What did come through for me from the minutes in particular was just some uncertainty from the central bank about how tight policy really was, and, you know, some thoughts about where the neutral rate really is. But definitely within those minutes and the prior day from Governor Waller, some more hawkish thoughts certainly coming through relative to the messaging that we've had from Fed Chair Powell. And as you've noted, that's given the US dollar, which was looking a little bit shaky there, has given it a bit of a boost back.
Okay, now should we actually, maybe it's a different question, should we actually consider the possibility of more rate hikes from the Fed, or at least one?
Look, we think no. It seems, whatever your degree of uncertainty about the level of neutral cash rate, with the 5 handle on the Fed funds rate, I think the policy rate is clearly in restrictive territory. The economy, the macro data has been a little bit underwhelming. Lately, Q1 GDP was soft. We've got the economy running at a below trend pace over the next couple of quarters. So I think policy's in restrictive territory. It's always a bit difficult for the Fed, I think, of course, because a lot of the impact of policy changes come through more at the longer end of the curve in credit spreads and equity markets. So, sentiment there has been pretty bullish, and I think that's perhaps adding to their sense that financial conditions are not perhaps as tight as they thought. But I think we're still on the tighter side of neutral, clearly, and with the macro data running a bit softer, and our view that inflation is going to continue a somewhat bumpy, but still a path of declining gradual trend. We think the Fed's certainly done enough. At Nomura, we've got 2 Fed rate cuts penciled in this year. The first of those coming in September, and then another one in December. And then we've got quarterly cuts throughout 2025 as well.
Okay, so if we can't see any cuts until September for the Fed, Andrew, what does this mean for the rest of the world? I mean, you're talking about the RBNZ even considering even a hike in this last meeting. Are we likely to see an easing cycle in Asia?
Yeah, look, it's very interesting. We think so. The macro story across Asia is divided. Some countries, such as India, Taiwan, doing pretty well. Other regions doing less so. The central banks also, I think, have different betas or different degrees of sensitivity to the Fed. We had Bank Indonesia out yesterday, of course, keeping their policy rate unchanged. That's certainly a central bank which is watching its local currency and is going to be influenced by the US dollar and the Fed. But I would say that amongst DM, Western central banks, there's a few more degrees of freedom for the likes of RBNZ and RBA, for that matter, and even the euro. I think it's more a domestic story, and they can, we think, disengage a little bit from the Fed cycle.
Do you buy the RBNZ narrative that they could hike rates, that they will maybe wait, at worst, wait until late next year?
Yeah, great question. Look, to be honest, I don't entirely buy that narrative. The RBNZ, they practice inflation targeting, and they generate a profile with their cash rate, which gets them to an inflation target in a time frame that they can live with. Look, what I would say is the RBNZ is certainly at the hawkish end of the spectrum when it comes to central banks. They have a singular focus on inflation, and they've demonstrated a great tolerance for pain on the macro side, if that's what it's going to take in order to get inflation to target. So, they've rattled the sabre a little bit on us yesterday, but I would say that another hike coming from a cash rate of 5.5 is really quite unlikely. Whilst the RBNZ, like the Fed, is flagging some uncertainty about the level of neutral rates and the level of potential growth, policy in New Zealand works at the short end of the curve. Most mortgages are 2 years or less, and with a cash rate at 5.50 and thoughts that neutral's somewhere around 2.75. I don't think there's any debate whatsoever. Policy's tight in New Zealand.
Yeah, Andrew, just a question on that too. I mean, it was just recently where we were talking about the RBNZ potentially cutting. I mean, the economy's effectively in a recession on the growth perspective, and I mean, do we understand this relationship any better between growth and inflation, really?
Yeah, look, it's very fair. I think what we're seeing is inflation is declining. It's certainly well down from its peak, but the latest rate of 4% year over year is still too high for a central bank targeting between 1 and 3. They've also, like a bunch of other central banks, of course, seen higher service sector inflation, and that's making them a little bit uncomfortable too. So, we think the path of inflation is lower, and the RBNZ, on their own admission, is expecting that inflation is going to fall to the top of their target band by as soon as the end of the year. Now, given that policy lags, I think, again, the prospect for a rate hike is very, very modest in New Zealand. Growth is weak, unemployment is rising, inflation is trending down. It's clearly just going to take a little bit of time to knock that last bit of the wind out of inflation and get the RBNZ to a more comfortable place.
Yeah, what about the RBA? I mean, they're not as hardcore focused on CPI in some ways. I mean, how do you contrast what we saw with the RBNZ and these RBA minutes that we got this week? We're also quite hawkish, too.
Yeah, look, absolutely. Such an interesting contrast between the RBA and the RBNZ. You're exactly right, of course. The RBA, in contrast, is pursuing a more balanced mandate. It doesn't want to destroy certainly doesn't want to destroy the labour market, and is trying to guide the unemployment rate back to kind of neutral levels. And, you know, it wants to achieve its inflation target without giving up those hard-won gains on the labour market front. Yeah, the RBA, of course, they too discussed the prospect for a higher cash rate. I guess that should come as no surprise, given that they had a nasty surprise with Q1 CPI. But, you know, I would say again, they're of the view that policy is already restrictive, and the upside inflation surprise in Q1 follows some downward surprises a bit further back. And I think the message from the RBA in conclusion was actually really interesting. They said, look, in this uncertain environment, one thing we do know is that policy is restrictive. And they said, look, let's not try and fine-tune things from here. So the message from me from the RBA is that they're certainly going to sit back over the next couple of months. The prospect for a move up or down over the next 2-3 months at least is very, very small. But yeah, very, very different philosophy and a very different approach.
Speaking of sitting back, do you think we could apply the same to the Bank of Korea? The press briefing begins in a couple of minutes. The economy's doing well. Exports are okay. They see spending coming back. I think correction is the word that they used. Can they sit back and not even cut for the rest of this year? What do you think, Andrew?
Yeah, we've got them certainly on hold today at 3.5. I think that's an easy one. We do have a rate cut penciled in for Korea later in the year, perhaps around October. You're exactly right, of course. Some of the activity data for consumption and exports have been really quite strong and better than expected. Their latest Q1 GDP report was good too, and unemployment's holding at low levels, around 2.8 there. We do expect the Bank of Korea to upgrade its GDP growth forecasts for 2024 today, but we're not expecting any movement on their inflation forecasts. And I think with an inflation profile, they're still trending in a nice direction. I think the stage is still set for a Bank of Korea easing later in the year. It's not a no-brainer, of course, but it's our central case at this point.
Their currency certainly has been hit by this stronger dollar story, Andrew. I mean, if you look at the Asian central banks that you cover, are we likely to see more intervention to try to support their currencies? Do they have enough reserves to really defend it?
Yeah, look, that's such an interesting one, isn't it? I know, again, some countries have greater sensitivity to this. Indonesia's certainly one that we've been watching very, very closely. Philippines too. Do they have enough FX reserves? Look, I think the story is a little bit mixed across the different central banks. Some are a bit stronger than others. But look, our central case still is that the US dollar is going to be trending lower over coming months. A lot of investors are still long the US dollar, and US growth momentum has become a little bit underwhelming, below trend. So yeah, so it could be a challenge for a few of them, but with a view that the US dollar is going to trend a little bit lower, I suspect that most of them are not going to be put to that test.
Well, fingers crossed. Andrew, fantastic. Thank you so much. Andrew Ticehurst. Save those reserves for something better. Andrew Ticehurst there, senior economist, rate strategist at Nomura. You're looking at some live pictures right now out of Seoul. We were just talking about the Bank of Korea. They're on the left side of your screens. Kurzin's on the right. That's the good governor, of course, laying out there the foundation of their rate decision today. Stay tuned for more out of that press briefing throughout this hour. This is Bloomberg.
The next industrial revolution has begun. Companies and countries are partnering with Nvidia to shift the trillion-dollar installed base of traditional data centers to accelerated computing. and build a new type of data center, AI factories, to produce a new commodity, artificial intelligence.
Nvidia's Jensen Huang there speaking after the firm gave that bullish sales forecast. For more on those Nvidia earnings, let's bring in our Asia tech reporter, Jane Lanhee Lee. She joins us from Singapore here this morning. And Jane, what did you make of these earnings? Do you think, obviously, we're still seeing strong sales. Can that continue, or do you see any sort of stumbling blocks ahead?
I think for this year, it's likely to continue strong. We're in the phase now since ChatGPT was launched late 2022. Everybody's rushing to build up data centers so they can either create their own ChatGPTs or take what's already out there and tweak them. So in this phase of a buildup of data centers, Nvidia chips are super short supply. And so that will continue forward. At least this year. The big question is, are we going to see anybody really making money using these AI models beyond playing with ChatGPT? And I think there's starting to be some concern building up that if there isn't any, near-term financial benefit to companies or consumers, and you can't really make big money with AI, we're going to see a lot of data centers that are built up, and maybe they won't be as in high demand. So in this sort of medium term, there's that challenge going forward. But for now, these chips they're hot, and they're in short supply.
Right. So I guess the investor dilemma now is, if I could phrase it that way, is, do we buy TSMC or do we buy Nvidia? How do we gain exposure to, and just sort of contextualize that from a Taiwan perspective?
Right. Well, TSMC has also gone up a lot, but there are, in Taiwan, and by the way, early June is Taiwan's most important conference called Computex, and Computex has repositioned itself as the AI conference. Nvidia, Jensen Huang will be speaking there in a partner keynote event. In Taiwan, everybody's looking for who gets a little piece of this Nvidia game. Is it the AI server builders? Is it the module makers that take the Nvidia chip, build it into a module to put into the servers? And so this investors will be looking what are the companies that hasn't really hit the radar yet? Where can we get in and ride that AI Nvidia ride up? So I think that's kind of the key element that people are looking for, because it's a little nerve-wracking to get into Nvidia when the stock has already nearly doubled this year already. When does that drop, right?
Oh yeah. Okay. Well, we'll see. Jane, thank you so much. Jane Lanhee Lee there, our Asia's tech reporter, joining us, I believe, today out of Singapore right now to talk us through, of course, the Nvidia effect in the region. Back to the other top story we're tracking this hour is the Bank of Korea. Left side is the Bank of Korea governor. You have the currency as well. More lines coming through here out of the good governor. So the decision today was unanimous. That more time is needed to gain confidence that inflation is slowing to target. Uncertainties over the rate cut outlook have grown. And again, bit of context, unchanged on rates. The growth outlook was revised higher. The inflation outlook remained unchanged as far as their projections were concerned.
Yeah, we're going to leave that there. But basically, I think they're echoing sort of, what's going on in all central banks' minds right now. If I don't know what the Fed's going to do for another few months, they're not going to talk about when they're going to start cutting anytime soon. So they say more time needed to gain confidence that inflation is slowing to that target. We're going to leave that there. For Bloomberg subscribers, you can continue watching at Live Go. You also find the big diary entries coming up today and later on this week, as well as some of the events you may have missed earlier.
Right, welcome back. Almost an hour into the cash market session, and the damage is being done across these markets. So we're pulling back a third day. Session lows on both Hong Kong and mainland China. Tencent, Baba are down, bottom of your screens. HSBC as well, and some of the big tech plays. Earnings day, more on that in a moment, or more on that later on. In mainland China, not to the extent that we're seeing in Hong Kong, but also declines there. Not nearly across the board, but certainly, there we go, down about 1%. But relatively speaking, these are sharp moves still in mainland China.
Yeah, and we're certainly seeing in the property stocks and the banking stocks here in the back of what we've been seeing with that stronger dollar story, the hawkish Fed minutes, the like here. So that certainly is what's weighing on Greater China this morning. We're back, of course, live pictures from Seoul. You take a look at what we're hearing, and it continues to be that story about they're uncertain about the rate cutting outlook here. And what you're seeing right now, the timing for the rate cut has become uncertain, according to the governor. And potential for a rate hike, though, is limited at the moment. So at least right now, they're still at least ruling out maybe the possibility of a rate hike, but maybe the timing of these rate cuts are going to have to be pushed back as well. That's the latest from the governor. And really, they're still uncertain about the inflation outlook, too, right now. We're tracking some of their stories for you this morning. Oaktree Capital Management is taking ownership of Italian football champions Inter Milan after the club's Chinese owner Su Ning defaulted on a $428 million loan. The collateral was a majority stake in the team, and Su Ning had been in talks with PIMCO to refinance a debt, but couldn't get a deal signed before the Oaktree loan came due. Now, Bloomberg has learned that Disney will sell its minority stake in a subscription TV broadcaster to India's Tata Group. Now, sources say the sale of the nearly 30% stake values Tata Play at about $1 billion. Tata Group will take full control of the unit, allowing Disney to focus on the merger of its Indian unit with Mukesh Ambani's media arm. Shares of Live Nation Entertainment fell in late U.S. trading as Bloomberg revealed a Justice Department move seeking the breakup of the business over antitrust violations. Sources tell us the case is related to Ticketmaster's unrivaled control of concert ticket sales. The 2010 merger of Live Nation and Ticketmaster has been the subject of several antitrust investigations.
Right, back to markets right now, equities, and one specific sector we're tracking too is when you look at mining stocks. So two stories here. You have a broad decline across metals prices from iron ore to copper, for example. That's one story. The other story concerns this potentially big deal, the biggest mining deal, if it goes through in 10 years. Another rejection coming through out of Anglo American here as far as that latest proposal out of the folks at BHP. Shares are down in BHP, off lows of the day. That we'll have more on this in a moment on the other side of this break. Let's briefly have a look at military stocks, defense-related stocks across the region here. So big news here this morning, I think 7:45 local time, Xinhua reporting that China started holding really big military drills around Taiwan. So, and of course on top of that, you have China hitting about 12 military companies with what seem to be on the surface symbolic sanctions, but I think it's more the Taiwan and military exercises story.
Yeah, just a few days after Laitingte was inaugurated. So I guess that does, the timing-wise, we were expecting to hear some sort of, or at least see some sort of China response. We're seeing that at least when it comes to these military drills here this morning. That's why defense stocks are up. We got plenty more ahead. This is Bloomberg. Right, we're heading to the Japanese lunch break, and we are seeing at least equity markets in Tokyo are still doing quite well, comparatively speaking to the rest of the region here. And really, I guess you got to thank that weaker yen story that's really helping this equity market today. We're up about 0.7% for the Nikkei 225. We're at 3-week lows for the yen, 156.76 here this morning. Of course, we're still watching those JGBs. We're just slightly off that 1% level that was reached yesterday.
Yeah, but 999 though, make a wish. I guess, right?
Might as well round up.
Yeah. Please, sustainable inflation. All right. Okay. Let's look at the rest of the region though, because of Japan. We're getting different pulls in this market. So chip stocks related to Nvidia. Lifting, I guess in some ways limiting the losses in some of these markets. You have, of course, the story in the mining sector, which we'll get to in a moment. Really, I think one of the big drags across in terms of points here. Sector groups on your screens, as we talked about there. So the IT story is a chip story. Some of the consumer names are getting dragged down by the big Chinese tech names that are actually falling quite a bit. Today, Asia ex-Japan, 0.5%, which is bottom right. And I think the other story that perhaps isn't as clear here is you look at the bottom row, second to the last tile to the right, Asia dollar index. The broad strength coming through in the U.S. dollar. against EMFX, to be more specific, is really playing out right now. I guess more on that in a moment. I'll also hear, of course, from Adrian Orr, our interview with him earlier on, plus, of course, any of the latest coming through out of this ongoing press briefing out of the Bank of Korea. In the meantime, though, as promised, more on this back and forth between these two big mining giants of Anglo American agreeing to enter talks with BHP. That's after it rejected a third proposal worth nearly $50 billion, now opening the door to what possibly could be, it's still potential, biggest global mining deal in over a decade. Martin Ritchie's right now with us, our commodities reporter, to get us up to speed. He joins us out of Shanghai. So, Martin, I don't know, this looks positive for BHP? Is that fair?
Yeah, it looks like Anglo has at least made some kind of concession in terms of being willing to talk to BHP. Previously, BHP has launched two non-binding offers. Anglo had rejected them outright and refused to even talk to BHP. But it seems that the companies have been discussing over the past week. There was an extension for the deadline for which BHP has to table a definite offer. What's at stake here, or what's at stake? What they're looking to resolve is this issue of the South African assets of Anglo. It's a very complex deal that BHP is proposing, where Anglo first sells two of its businesses, then BHP takes over the remainder. Anglo's concerned that this is too complicated and it leaves its shareholders holding a lot of risk in this multi-step transaction.
I mean, it's already gone 3 rejections. What more can BHP do to get this deal over the line, Martin? They said final offer, but is it really final offer?
Did they mean it?
Yeah, I mean, there's obviously negotiating stances going on where they say we can't possibly do this. And then they would do something else. Look, BHP came out yesterday again and said, this offer's final. But if you look at the small print, actually they say that if Anglo's board agreed to a deal, the price could actually be different again. So there's a lot at stake in the coming days. Obviously, also on the BHP shareholder side, there might be concerns about BHP paying too much or going for a transaction that's really complicated and will involve a lot of risk. So they'll need to listen to their own shareholders as well.
Okay, Martin, thank you so much. Martin Ritchie getting us up to speed there on where we are, and maybe third time lucky. Okay. Back to this ongoing briefing out of the Bank of Korea, more lines coming through, and the new one coming through is, so the meeting was unanimous, the decision was unanimous to be more specific, although Governor Rhee mentioning here that one member actually was open to a rate cut, or is open to a rate cut over the next 3 months as something of a preemptive move there.
Interesting.
Yeah.
The majority, though, 5, still preferred to keep the rate at 3.5% over the next 3 months. I think they want to wait a little bit longer. I mean, you're hearing patience is a key word that you're hearing from a lot of these Asian central banks. Maybe they're waiting for what the Fed is going to do first and what impact that's going to have first. But still expects inflationary pressure to ease in the second half. Perhaps that's why they kept their inflation forecast unchanged here this morning for the BOK. Let's talk about from one central bank to another. The RBNZ governor, Adrian Orr, is downplaying chances of another interest rate hike. Speaking with Bloomberg, he says the central bank would only tighten policy more if it's needed to contain inflation expectations.
Another rate hike would only be meaningful if we thought inflation expectations were getting away on us again, starting to rise because of the persistence of actual inflation. We know that forward-looking inflation is heavily influenced by the current level of inflation. So that's our main concern. Persistence raises the risks that expectations don't do the job that's needed. We know and we are confident that we will get inflation down to the 1% to 3% band. We'd just like to make sure we get there soon without risking that another blowout in expectations.
And I get that sort of non-tradables element is going to be crucial here as well. But you said that you have limited tolerance for inflationary surprises to the upside. Is that patience kind of almost running out? Do you look at that second quarter CPI print as the one that maybe makes or breaks that decision to go again or not?
No, we're not hinged off any one statistic, and no, patience hasn't run out. What we are showing is that we've got a lot of patience. Our projection is to keep the official cash rate at 5.5% until early next year. That we believe that will have inflation back down within the band, and at that point we can start thinking about normalising interest rates. That's all in our projection. The sticky prices that I've talked about, and particularly over the next couple of quarters, have been well signalled, and they are in our inflation projections. So it'd have to be something over and above that again to really, to surprise us. And we think the risks are balanced over the period ahead that matters for us this time next year. Without doubt, the economy is performing below its potential. An output gap is opening up. Disinflation is occurring. So we feel pretty comfortable. But when you're starting from a higher inflation position, when you've got low productivity, the central bank has to remain alert.
Given you are seeing those cooling trends coming in and you're really getting that weaker or softer economic data now, even though you have that component where non-tradable inflation data is still elevated, do you think that there's that need to get inflation back to that target band first before cutting, given there is that lag transmission effect as well?
No, that's exactly correct, and in fact our projections have us easing interest rates before inflation is back at that midpoint, because you are right. We have economic growth picking up here in New Zealand in our projections from this quarter onward, but the level of economic activity is still below the potential. So, we can start to ease before CPI inflation exactly hits the midpoint of that target, and that's what our projection has.
You definitely do seem to have caught a few investors on the hop over the past few months. But Governor, you said that you expect growth to pick up. Where do you think that growth is coming from, and why do you think the New Zealand economy is able to cope with such a sustained period of elevated rates?
The growth is coming through from government spending, government investment. We are looking at private investment starting to come back. Building consents, etc., have levelled out. And importantly, we've had a 2% per annum growth in our working age population. So migration has been considerable. The really tough stuff is that aggregate demand has been rising, per capita spend has been falling. And the difference is the population's been growing. And so that has been putting the upward pressure on rents, on demand for dwellings, and that's kicking construction activity back in. The pipeline of infrastructure investment that's in front of New Zealand is long. And, of course, the world is open up again, so our tourism is finding its feet. And likewise, with global growth expected to pick up, our trade is also growing. So there's lots and lots of economic growth, but there is that rebalancing from consumption to production.
That was the RBNZ Governor Adrian Orr with us earlier on. Breaking news here out of South Korea. And wow, here we go. So South Korea has now introduced and laid out the details of this 26 trillion local currency support package for the chip sector here. So the bulk of that, the majority, 17 trillion, will be for large-scale capex that goes into capacity. About $1 trillion of that goes into fabless and suppliers. So the bulk of that, of course, goes into really, I guess in some ways, investing for the future. That translates to about, what's the exchange rate? 2,700? 18.5 billion?
19 billion.
19 billion. Oh, there we go. Close.
Yeah, and obviously this could be a potential boon for the likes of Samsung, for SK Hynix. But what we're hearing, this $19 billion package, is more than double than what the finance minister had proposed less than 2 weeks ago. That certainly is going to give a lift to some of these chip stocks, of course. So really, this follows a lot of calls to support the local chip industry, of course, as we start to hear governments from the U.S. and China spend billions to attract and bring manufacturing projects by the likes of TSMC and Intel. So certainly you're seeing Korea join into the fray now.
Yep, and maybe cement their status as still the world's biggest producer of memory chips. That's a breaking news for now. More on that in a moment. Kospi index flat right now in the trade, which, by the way, compared to where you are in the rest of the region, actually doing much better. And the reversal of the move also might have to do with the fact that some of these lines coming through out of the back of Korea also still taking place. So it's quite busy in Seoul today. Right, still ahead.
We got Chinese newspapers weighing in on this abnormal fluctuations in special government bond sales that have led to trading halts. That is your China Brief. Next, this is Bloomberg. All right, here is your China Brief. A look at what's making headlines in national newspapers. And the China Securities Journal is saying that these special ultra-long government bonds need to be treated rationally. Of course, this call comes with trading for the 30-year note halted for a second day in Shenzhen. It was suspended twice on Wednesday as well in Shenzhen and Shanghai due to what they call abnormal fluctuations in transactions. And these special bonds are part of course, this whole fiscal stimulus bump up.
Yeah. So on the back of that, too, there's also this separate conversation on this rally that's taking place in Hong Kong stocks here. If we could just turn the page here, please, on where we are here. Yeah, so this Hong Kong stock rally boosted returns in ETFs targeting the market, attracted inflows. It says here 90 ETFs returned an average of 4.4% this year through Tuesday, while 8 of them gained more than 20%. And despite the tensions we're seeing between, of course, and this is a separate story, between the U.S. and China, the two countries have come together for a tourism summit. Xinhua quoting President Xi Jinping saying China warmly welcomes U.S. visitors as an important bridge for communication and mutual understanding. Earlier this week, the president reportedly called for greater efforts to boost China's tourism sector. So let's unpack some of those stories right now. So let's start with the bond story. Sort of the timing was right, because today, right after the open,
we had another halt.
We had another halt in some of those local bonds.
And it's interesting, right? We were talking to, I believe it was Anitza Nip from before it was going on sale. Yeah, and she said there's going to be plenty of demand for these bonds because investors are still looking for places to lock in and look for yield. And so there is a place and demand for this right now. And that's why you're seeing maybe so much of this flurry of interest into these CGBs here right now. And that's what's prompting it. But yeah, they're calling for more rational minds, which I thought was quite interesting, whether we can actually tame this sort of market in for the next few weeks or so.
Well, it's ironic that you're getting so much demand for this, because that is the problem, that people are not spending their money and they're keeping it in the bank. And this is just maybe a higher yielding product if you think about it.
Yeah.
And one that is backed by the central government, right, with a better yield as well. The other story as well is they're trying to boost the tourism sector here.
Yeah, I mean, I guess they're trying to look for people, outbound tourism certainly has been coming up, but we're not close to, I think, 2019 levels yet.
Yeah.
I think we're starting to see inbound tourism come back to China, but I don't know how many are come from the U.S.
Yeah.
There's still a lot of, I think, the visa issues, the flight issues. I don't know how much has been cleared, but we're going to have Jane Sun coming on in the next hour. She might be able to tell us a little bit more about that.
Yeah, the upcoming, it's going to be a hot summer, as they say. There we go, vacation season, outbound travel, inbound travel. Trip.com, of course, just reported earnings this week, and Jane Sun will be joining us later on. Joining the shows later on, I should say. Right, let's take a look at the wider Chinese economy now. We touched on some 2 key points there. We have Shuli Ren joins us here, our Bloomberg Opinion columnist. She actually thinks in her latest column that the priorities of Beijing are finally shifting from industrial upgrades to boosting domestic demand. Talk us through this.
I think the sharp drop in home sales is perhaps freaking out even Beijing's top policymakers. I mean, let's just look at the numbers. At its 2021 peak, China registered over 16 trillion yuan of home sales. Last year, it was 10 trillion. It hurts, but perhaps President Xi Jinping could tolerate it. But this year, we're looking at maybe 7-8 trillion yuan of home sales at best. So what we are seeing is that suddenly China China's economy is having a 8 trillion yuan hole. And then when they look around, there are just simply no alternative sectors to fill that hole. For instance, China's car sales is doing super well, right? We know the EV is ahead of everyone else. 1 in 5 EVs sold in Europe is from China. But even that, auto sales is just about 5 trillion yuan. It's not big enough to fill. China basically has to come up with a second auto industry to fill the drop in home sales, and there's just none. So I think they're freaked out about that.
What is still needed to boost that domestic demand, though?
I mean, a lot of things, like, for instance, like the youth unemployment is a problem, right? Like, even if you're middle-class parents, say people in their late 40s like me, and I look at my kids, I'm like, I'm not going to spend because I have to not only think about their future education, schooling, I also have to think about what if they have no jobs in the next 30, 40 years. I have to support them. So that is something that the government has to tackle to find jobs for China's new university graduates.
Yeah. And how do they do that? Like, what in their toolkit do you think is most useful to encourage, the upping of industries and capacity to create those jobs?
Definitely not in the industrial sector. Young Chinese do not want to go work in factories. Yeah. They want to work in offices. Perhaps we have to talk about consumer tech again, right? We have to talk about services sector, media companies, maybe a little bit of high-end tourism, but not the low-end, tour guide kind of a tourism. Yeah. So it is a tough task, but not in the industrial sector.
You mentioned about exports are the saving grace, but really it's still not enough.
It's not
at this point.
Yes, and then what people are realizing is that whatever President Xi Jinping is saying, China's economics still follows the U.S. business cycles. We are seeing a soft landing in the U.S. Therefore, China's new export orders are coming up. That's no good. That's why I think it's very, very important for China to have a big consumer society. Without a strong consumer base, China can never be the superpower he wants to be.
All right, Shuli. Thank you, Shuli Ren there, our Bloomberg Opinion columnist, with more about this shift that we're seeing possibly in the Chinese economy and the priorities ahead. We got plenty more ahead. This is Bloomberg. All right, it's all been about a chip story here today, whether it's about Nvidia, whether it's about the AI trade. And here, certainly, we're getting a little bit more fodder to look at when it comes to this Bloomberg scoop that we just talked about South Korea now unveiling a $19 billion package of incentives to really bolster the chip sector. So there you go. SK Hynix, Samsung Electronics seems to be reacting quite positively to that news on the back of also what we heard from Nvidia as well. But, this just goes to show the race to really stay ahead in a very competitive industry right now.
And everyone wants to be an Nvidia, right? Everyone wants to be, whether that's an economy that is certainly focused capacity-wise on that. And, of course, South Korea has been really in this game, right? So these two markets have really been the Asia-Pacific plays on the AI story. South Korea and, of course, where you are with Taiwan, with TSMC at still a record high, I believe, today. And South Korea is quite far behind, but certainly the Value Up program plus this has really made this specific market a magnet for sort of buy calls from a lot of the people that we talk to here. Now, going into, I guess, the other story, this ties us almost nicely into the Bank of Korea story and the central bank theme that we've been tracking this week.
Because we talked about the economy has been strong. GDP has actually been pretty good and resilient in the face of what we've been seeing with exports. The chip part of it certainly has been helping in some ways. And maybe that's why you're seeing a bit of hesitation on whether, the BOK has met the conditions to warrant any sort of rate cuts. And you take a look at what they mentioned here, and at least when you heard from the governor in this press conference, the potential for a rate hike is limited. So that is certainly helping the markets react a little bit more favorably as well. The yuan, I guess, paring back some of the initial losses here. Kospi also reversing a little bit. But EMFX has basically been pummeled a bit on the back of these surprisingly hawkish comments from those FOMC minutes that, we thought this was going to be, as Andrew Ticehurst mentioned in Nomura, these were supposed to be dated.
Yeah,
but then,
non-event.
And, Nvidia was supposed to be the big story today, but not quite.
Especially because, Jay Powell at this very same meeting pushed back, I guess, in the same way that Korea right now is pushing back against rate hikes.
Yeah.
Jay Powell pushed back very hard on that notion that rates are going up. And then here we are talking about the minutes that it was discussed. The RBNZ said it was discussed.
Yeah.
You had hot inflation in the UK yesterday.
Yeah.
So, you know, the UK was supposed to be cutting rates, I think it was next month, if I'm not mistaken, right? And then here we are talking about, oh no, rate hikes are not coming. So how the pendulum has swung. Which is why sometimes I even think, should we even believe some of these things that central banks are saying if they're data dependent really on these things, right?
Yeah, markets are taking a bit hard here this morning. Take a look at this equity market, especially in Hong Kong. That's really leading those declines here today. We're down about 1.5%. CSI 300, we're off some of the lows, but we're still lower by about 0.8%. U.S. futures, though, are still punching higher. So the Nvidia effect is still there for NASDAQ as well as the S&P. So it looks like, you know, this exceptionalism story still has some legs here and really reinvigorate this whole AI trade once again. Asia, though, seems to be faltering, though. Take a look at MSCI China. We're down about 1.4%. We talked about that fix from the PBOC adjusting to this dollar rebound that we've seen. We talked about the impact on FX. So you're certainly seeing across Asia EMs today, like the Korean won, like the peso, like the Malaysian ringgit, and the unchanged now when it comes to the Chinese currency. But commodities are certainly taking a hit too. Maybe it's the dollar story. There's also been signs of weakness in demand in China as well. That's really why we're seeing copper futures are retreating in Shanghai here this morning. And it's really bringing a lot of the metal space down. Look at that. We're down some 3.6% in copper. Aluminum's down 2.5% too, Dave.
Yeah, these were some of the big winners and almost a mirror image of where we were, I think, late last week, and perhaps why we're also seeing, as far as the drag on the equity market goes, really the mining stocks, the BHPs of the world, some of the copper producers in the region are pulling the index down on the back of these. So we'll see what happens, of course, when a couple of markets further open up in the next hour. Plenty more ahead, though. This is Bloomberg.